Welcome everybody to another eye opener. This is Mark about Daily's quick little video chats we do with top traders, and we've got Blane Markham back here again. Blane, it is great to see you, my man. Hope you had a great weekend, and wow, we hit that new high that you've been talking about for a while, and I know you were definitely, you saw it coming, and we're there. So now, not only that, but again, another great trade last week. You set us up with one that jumped almost 60% again. Just consistent pattern of winners from you. The tools that you're using, the approach that you're using is working. I want more. I want to hear what you're looking at today, and I'm anxious to jump in here and see what you got going. I want to follow up on the trade. Also want to follow up on the Golden Cross, man. I know that pattern was setting up, and I want to see what it's doing right now. So, hand it off to you, and let's see where your brain's at.
Yeah, absolutely. Well, thanks so much, John. Really excited to be here this morning. And, thank you everybody watching at home for being here live, attending with us. And exactly as you said, John, in last week's couple sessions, you and I both really honed in on the fact that, hey, the technicals are really setting up really nicely. Yeah, there's a little bit of uncertainty still out there. It's definitely a little bit of a wall of worry to climb for this market, but, we're so close to those new all-time highs. It seems like the trajectory of the market was just set on that. And, it looked honestly inevitable that we're going to hit them, in pretty short order. Yeah, I think we said that on Wednesday. And, of course, the following day we hit a new, hit a new high intraday. And of course, on Friday, ultimately, we closed the week out in new all-time record highs on both the S&P and the NASDAQ indexes, both NASDAQ indexes. So, really saw that nice thrust to the upside in markets. So glad to see that it's played out as we were anticipating that it would. But let me go ahead and just pull up my screen here just to go ahead and dive into what I wanted to share today. But yeah, I have a couple things. But again, as I like to always do, I like to start off just with this chart of the S&P 500 right here. And you can clearly see the incredible bullish surge that we had last week. This was Monday's trading where we had a big dip towards the beginning of the day. A lot of geopolitical concerns still really overhanging the market, but kind of as we got to the close, people started sniffing out that, oh, this thing might be wrapping up, and actually closer to the end rather than the beginning. And that really kicked off last week's set of events leading to these new all-time highs. As you can see, the subsequent 4 days right here, leading to that new all-time high right there set on Friday. Now, as you can see, of course, the market's broken out to new 52-week and all-time highs. And as you said, John, we have a very significant technical buy signal that I want to follow up on here next. So it's the Golden Cross. I've been talking about it for a little over a week now. I feel like I might be the only one out here talking about this, proactively talking about it in advance. Because this is such a widely tracked buy signal. I'm shocked that it hasn't been reported on more in financial media, but this is setting up right here, and at the current levels, there's only 5 S&P points between these two different moving averages. So that is such just a just a glimmer of light between those two lines on the chart. We're talking about the red line right here, which is our 50-day moving average, and then this pink line right here, which is our 200-day moving average. You can see just how close those are. If you could just put a magnifying glass over that right there, you would see there's just a tiny little sliver of yellow of the chart between those two. So what that means is that, based on the market's action lately, we're starting to see some of these older numbers from, the lows in April fall off, and they're getting replaced in that average calculation with these new all-time highs. So tomorrow, almost mathematically guaranteed to see that Golden Cross buy signal finally happen, John. Which, of course, that doesn't mean that, stocks are going to shoot up immediately following that. But what that means is maybe not in the short term, an immediate huge rally, but following that over the next 6, 8, 10, 12 months, that buy signal that we're talking about here typically precedes a substantial leg higher in the markets over that following 10 to 12 months. That's what the data says. Of course, past results don't guarantee future, returns. We all know that as traders, right? But, it is helpful to follow past data and see when these trends happen, when these buy signals happen, what typically follows them. And that's what we're setting up for tomorrow's trading. So really exciting stuff there.
Yeah, no, it's great to see it on the chart and see how close it is. still a lot going on. And, I know you're going to jump into this stuff, but we pushed high so high so fast in the last week. I wouldn't be surprised if we don't take a breath as we start to see this signal set up. So I put that out there so that people don't jump to conclusions. If we see a little
Hmm.
bit of a retracement back down a little bit, it's just that market kind of coming back into that comfort zone. And the Keltner channels that you guys use on the charts really show that well. You can see it in the past where it kind of pops its head above. It kind of prairie dogs a little bit above the top
Hmm.
line and then goes back down and just continues to keep climbing. So we want to be mindful of that as we're starting to trade. And just because if we see that retracement, that doesn't mean that this isn't playing out. It isn't doing exactly what we thought. It just could be the market taking a little bit of a breath there.
Yeah, exactly. I mean, any, day-to-day action, I mean, it's anybody's guess what the market's going to do, right? What we're trying to project is, a short-term, medium, and long-term trend. And that's what the Golden Cross is so helpful in projecting with, is talking about that more medium to longer term trend and what the market's likely to do, as I said, 6, 8, 10, 12 months out from now. So yeah, of course, and what I was going to say, John, is, it's funny, our minds are definitely in the same place looking at this chart right here. As you said, we have the Keltner channels thrown on here as an additional technical indicator. And as you can see, like you were just illustrating there, John, the S&P does appear to be pretty overextended, speaking in the short term right now. So just technically short term overextended. And that's because, we're starting to trade, for a good bit above that upper Keltner channel. Again, here's just some of those examples you were mentioning, John. Just, if you look back just over time, typically, the market, or even stocks for that matter, once they get outside of that upper Keltner channel band, they typically don't stay that extended for too long before having a little bit of a, retracement, a little bit, pull back to the mean, revert to the average for a little bit before ultimately trading higher. And, we can see that being replicated down below too in our RSI chart. So this is a really helpful indicator in this sub chart down here. So this is an RSI, or relative strength index chart. And you can see the current 5-day RSI for the S&P 500 index is nearly at 86. So that, if you're unfamiliar with RSI charts, that's a significantly elevated RSI. Typically, historically speaking, when an RSI is above the threshold of 70, you can see this upper line right here, 70. That's signaling the stock is, entering overbought territory. And the further above 70 that it gets, the more significantly overbought that it's getting in the short term. So again, that doesn't mean the trend's going to completely collapse and change and we're going into a bear market right after this. That's not what that means. It just means in the short term that, we've likely run a little too far and we're likely to see a bit of a short-term retracement, pull back down to somewhere roughly near this middle Keltner channel maybe, before starting to bounce higher. But, still ultimately making that really constructive series of higher highs and higher lows, keeping that nice bullish trend intact. So that's kind of what we're anticipating for the week to come. Of course, this week is a really shortened trading week. We only have 3 full trading days this week. Friday, the market's closed in observance of July 4th, and then it's actually closing early on Thursday. So kind of a shortened trading week. It's all kind of tightened down together. So, we may see that retracement this week. We may see it next week, but we're fully anticipating that to happen. But with that said, that's what's kind of on our radar there, John. But I did want to touch on that trade from last week that I believe this was from Wednesday when I highlighted this one. But last week we talked about Amazon. This was a signal right here that, according to the technicals, the things I like to look at, it was really setting up with a very strong and convincing looking buy signal. And this was the trade I actually brought to one of last week's eye opener sessions that we did. And specifically, I talked about the Amazon July 18th 200 strike call. After breaking down the technical signals here, why Amazon looks so strong. I said that would be likely the call option I'd look to go ahead and purchase to play this trend if I was looking to enter it. Full disclosure, don't own that trade. So just putting that out there, not hyping my own book here. But I threw that one out there just as an example trade. And we had a nice rally towards the end of the week after Wednesday. So you can see the stock had a nice move higher on Thursday, and then Friday into the close. It actually closed at session highs on Friday. And it's just a touch below that level now, but still significantly elevated from when we discussed this trade on Wednesday. So, John, before I hopped on this morning, that call had rallied all the way up to 24 points. It may have changed slightly since then, but at that level of 24, that would be coming in at a 57.6% return. So, not too bad of a return in just a few trading days.
Yeah, no, exactly. We did I did kind of check that out as well and was super excited that it played out like that. I'm really hoping that a bunch of folks were able to jump in and take advantage of that. But you're setting a bar here, and you're setting it pretty high. You've had some really good setups for us in the last couple of weeks, and we want more. We are a voracious animal. You have to feed us better, more good picks like this. So we're really interested in what you're looking at next. I know that the tools that you use to spot these are stuff that you developed over a long period of time. And the way that they're built to consistently spot the setups with the best probability. There's obviously no guarantees, as you mentioned earlier, but what you're looking for is probability. You're not looking for a winning lottery ticket, one and done. You can never do it again. You're looking for these steady income producing setups that we can count on. So, yeah, way to go on that. Thank you again, Blaine, for giving everybody that great, that setup that they could look at, explore, and decide if they wanted to get in on. Again, I hope everybody did, but let's see what you're looking at now.
Yeah, absolutely. And just to add further, Amazon does appear to still be, kind of close to overbought territory. It's kind of, like 1 foot on one side of the line, 1 foot on the other side. So it's kind of straddling that overbought territory line right there. So with that said, it's still that trade still does look like it's in a very strong trend. The technicals still look pretty compelling for Amazon. So I was going to say that looking forward, that trade does still look like an attractive entry for that one there. But moving on, John, as you were saying, always looking for the next opportunity out there, right? Kind of how I opened today's session, talking about the S&P 500. Of course, the technicals look great, the trend looks great. Everybody loves seeing the market break out to, just rip higher and break out to new all-time highs. That's a fantastic setup, and I'm very excited about that, but also being mindful of the fact, as I touched on, stocks do look a little bit, at least the index level and some of the, sectors and stocks that have been really leading the market, kind of pushing things higher. The market's really been rallying higher on the back of these really strong sectors. Those areas of strength are starting to look a little bit frothy at this point. So, I like to be mindful of that too. Certainly don't want to try and get greedy and just always assume that stocks are just going to go up day after day and, without ever taking a breath and cooling down. So, what I'm saying here is that, still keeping my eye on these, sectors and stocks that are showing the greatest relative strength, compared to the market, have been the leaders, but, being conscious of the fact that they look pretty technically extended. And maybe now is not the best time to be looking to enter a trade in these leading sectors. So, still the tech sector, I have a chart pulled up right here for XLK. Again, you can see very similar to the chart of the S&P 500. We're pretty well above the upper Keltner channel here, really far outside of that band. And again, looking at the RSI chart down here, again, looks pretty extended at current levels. So, again, would be fully anticipating, a bit of a pullback in the next, 5 or so trading days, likely in XLK. Of course, can't have any guarantees here, right? I mean, it could continue to get even further overbought, but that typically the further you stretch that rubber band, further you stretch it out, the harder that snapback is once it gets let go. So, fully anticipating that these leading sectors and pockets of strength are probably going to pull back and come in a bit as well. And, probably have some better opportunities to get in here, maybe about a week or week and a half from now. Once things have an opportunity to cool down, there's some bigger events later this week. We have a big jobs report coming out on Thursday. It's the June jobs report. Heading into a really long weekend, big, massively important, data drop like that, maybe that could be the catalyst to, kind of knock stocks off their highs, kind of bring them in a little bit. But, there's always something coming, right? So, fully anticipating we're probably going to have a little bit better entry price on some of these leading sectors and even on the index level here coming up. So still keeping my eye here on XLK. You can see right here, this is a ratio chart, John, that I always love to look at. This is looking at the ratio between the XLK and the SPX. So your numerator here, of course, XLK, your denominator's S&P 500's price. Just ignore all the numbers over here. These are not really relevant to the point that this chart's trying to illustrate. What we're seeing is we just want to see the trajectory here, the trend up. When we see this line start sloping up, that means XLK in this case is starting to outperform relative to the S&P 500. You can see this whole period of time right here. They're roughly, trading right in line with each other. They were keeping pace with one another right here. The XLK actually sold off a bit harder than the S&P 500 index did. But here you can see in the rally back, it's rallied a lot harder than the S&P 500 has. So it's shown great relative strength over the past roughly, call it 2.5 months off the April lows. So, that's still the pocket of strength in the market. That's still where we're targeting. But, again, being mindful that things are, a little frothy at this point and probably going to have some opportunities for better entry points coming up.
Yeah, that makes sense. So definitely good to get that relationship of how that sector is doing against the broader market. Love these ratio charts, really do. Very helpful in engaging momentum and kind of seeing where the money is moving from sector to sector. It's incredibly helpful for that. And what that does, we jump on these sessions and I kid around a little bit about you got to give us more trades. The ability that you have, the tools that you guys have developed to scan through all these tickers and kind of dial in on the ones that are great and the ones to stay away from. That's the kind of thing that really brings the value to the education, the tools, the alerts, all that stuff that you guys do. Really, really helpful there.
Yep, absolutely. Well, that's our whole goal here is, trying to, make trading a bit smarter, trying to not go into the battle, with no sight, kind of going in blind, it's nice to be able to have some time-tested tools, in your trading tool bag to assist you to help, make more educated trading decisions. And that's exactly what we're trying to do here. Um, but all that to wrap up what I was saying, John, is that in this period of time where we've identified, the market has a great bullish trend underlying it. We've identified the sectors and pockets of strength in the market, particularly the tech sector right now is one that really stands out. But we've also identified that stocks and the sectors, these really leading pockets of the market have become a little overbought. While we're not looking to enter a lot of new trades right now, what we're doing right now, this is the perfect time. This is what we're doing here is this is the time to build your buy list. This is the time to look at those pockets of strength, look at the things that have been really outperforming the market, have great relative strength compared to other stocks and compared to the market. And this is time to build up that buy list and, see these areas of opportunity, so you can watch them closely. And when you see that pullback, you see those stocks come in, then, you're not trying to scramble and do all the research. Then you've already done it and you're just waiting for the opportunity to get in. So that's what we're doing here. That's how we're, using our time wisely right now. Enjoying the new highs, but doing the work for the future, right? So that's how we're proceeding.
Yeah, that's just it's easy to overlook that that's as valuable as having a great pick, being able to protect your assets, protect the account so that you don't, bleed out, desperately trying to manufacture trades. The trades are there. Let them tell you when they're there. Let the charts, let the tools kind of bring those great trades to the surface as you guys are great at doing, but don't force it. And I did a lot of endurance sports in my life, and I call it kind of active recovery, where you just kind of ease up a little bit and take a rest. And you're kind of letting your resources, your body in that case, recover a little bit. And this is where you're kind of letting the market kind of do its thing and work it out and protecting your energy, protecting that kind of capital that you have in the market and just kind of putting a lid on it so it doesn't get away from you, and stay clear-headed and stay focused. Great advice, Blaine. This is really, really helpful.
Yep, absolutely. Just kind of to build on your analogy there, when you are running or jogging, hiking, whatever, you see a big hill coming up, you don't go sprinting and try and sprint all the way up the hill. You just try and keep a good pace and just, as you said, kind of keep your momentum going, and hold back, and then when opportunity is ripe, take advantage of it.
Yeah, and so the key here then is to be ready to react too. As you're pausing, you're putting yourself in a better position to react when you do see a good sign. I know that something that you guys have been doing lately. This just started. There's the Trade of the Day live events, which are great events where you jump into what's happening right now in the markets. And this is a great opportunity to mention that because in these reset periods, you've got to be ready to pounce. You're sitting there and you're getting yourself just kind of rested up and ready to act. And those events help highlight things as they're happening, and that's why the live aspect of that is so critical. So we'll put a link to the one coming up. I believe you got one tomorrow. Is that right?
We do. Yep. Yeah, we have it's as you said, it's a relatively new thing that we've started doing over here at the optioneering team. It's kind of taking our old TOD newsletter format while we're still doing that. We've kind of shifted to start doing some of the TOD sends more as a live session to kind of be interactive, engaging with you there as the audience, but still bringing our technical analysis to you and kind of showing you what we've found here as our team. So yeah, Helene and I will be going live tomorrow morning. I believe it'll be 9:30 Pacific, so that'll be 12:30 Eastern. We'll be going live and doing our next upcoming TOD live session. So we'd love to have everybody there. So if you go ahead and sign up, just go ahead and register. You'll get the reminder to make sure to hop in the room.
Definitely, yeah, and we'll put that link in there as well. Blaine, thank you so much for spending the time with us today. Looking forward to everything that you got to send our way. Grateful for you sharing all this. I hope so many people are being able to take advantage of these great trades that you're highlighting for us. So, thank you so much for your time.
Absolutely. Well, glad to be here, John. Thanks for having me, and hope everybody has a fantastic week. If you're planning to do a little cooking out and grilling out for 4th of July, please hope you all enjoy it. Have a great holiday week, and I'll see you back here, I guess, next week, right, John? Is that when we're doing the next eye opener?
Yep, looking at next Monday, a week from today. So we'll see everybody then.
Fantastic. Take care, everybody. Have a great week.